So it's a difficult time. 2020 was hard, and 2021 there's still a lot of uncertainty around, and some of us are feeling more anxious and thinking about or worrying about business a bit more often than we used to. And success in 21 is likely to look very different to how it looked when we had 2020, when we started in 2020. But what I want you to know is that we're all in this together and we're going to come through it together. In the words of JFK, a rising tide lifts all boats. So the more that we support one another, the better we will all do. And we here at Tax and Trust are very much interested in supporting our business owners and them supporting each other as well, which is why we're running these seminars and workshops and webinars in which we want to help and we want to continue to do. So thanks for tuning in. Let's get straight into it. So this webinar, while we're hoping it to be practical and that you'll come out with some clear action steps of what you're going to do in your own business, is not to be confused with specific advice one-on-one to your particular circumstance. So if you're facing a particular challenge that you'd like to reach out and get help with, then please get in touch, and I'll be saying that a few times through this webinar. But we have picked out some areas that are pretty key in most businesses, and we're going to just cover those areas and see if we can help you overcome those challenges throughout this webinar. So the agenda was on the screen, so I hope you read it. So firstly, again, acknowledging that there are some challenges to overcome, and some of the challenges are written up there, which, you know, every business is facing, and overcoming challenges is never easy. If it was easy, you might have done it already and may not be even on the seminar. So it's a key time to set aside and work on your business and develop a strategy for getting back to business and growing it at this time. The first things that we do when we're looking at managing a business is identifying risk in the business. So risk has can crop up in a number of the most important areas of the business. So the key areas are listed here on the right, starting with governance, which is all about funding the business and having a clear direction of where you want the business to go and what it will look like in 3 and 5 years. And then this leadership is all about, have you set annual goals and written down some key action things to work on. The products and services is have you got all the products and services that you're running profitable? And so it's looking at that area. Do you have operational difficulties or processes that are slowing you down and making it more difficult to make a profit at this time? Is your biggest risk marketing? There's just not enough leads coming into the business for you to convert. Is your biggest problem is creating value in the eyes of a customer, and that's you're getting lots of leads but you're not able to convert them into sales? Have you got financial problems and cash flow problems in your business? So there's processes about getting paid that you can improve. Is HR letting you down? We're going to discuss that slightly. The admin roles is all about creating efficiency in your business, and maybe there's internal processes as an admin that you need to think about. And then there's technology, and obviously the governments recognise how massive technology is to help improving to the business, and they've just given a digital boost which small businesses can claim. So maybe there's certain technology that you're aware of, or some apps that you think might be able to help you. So those are an area that you can look at. Now, all of this is too much. You can't look at all areas at once. So what we're suggesting is that you find the most risky area to your business right now. And because my clients are small and there's usually between 1 and 5 employees, you usually know where the biggest risk is. However, if you want help with that, we have got a risk review template which I'm happy to go through with you in person or by virtually, and help identify your biggest risks and which one, the area of the business that you most want to work on. But if you're like me and thinking about some things in the middle of the night, I wonder what it is, and perhaps we could start by asking you to write that one risk down out of that one key area, out of those areas that are up on the screen, which is most key to you today. And then we're going to identify that and look at ways to put actions to that key area by the end of the webinar today. So if you wouldn't mind writing that down now. Okay, so we've got that key area that you're going to look at changing. So these are the 5 A's of change. We are looking at change because we don't want to be doing the same thing in that area that is now that we can recognize as risky, is providing risk to our business because it needs improvement. The same way as we handled it last year, we have to make some changes. So the first step is creating the awareness that this change is needed, and that without change, your business is going to be impacted. Are you aware of the necessary changes or options in that area that you selected? We don't know what we don't know, right? So hopefully by the end of the webinar, you'll be aware and a little bit clearer on some of the changes you need to implement. The second A of change is acceptance. To get back to business, we must accept that we need to make changes. So there's a awareness of a change, and then there's an acceptance that you have to make the change. You can't just put it off anymore. There's a big habit of many clients whose business are plateauing and the income is about the same, the profit is probably dropping, that they are aware of change that they need to make. They even accept that they have to make that change. They don't do anything about it. So the third step is action. Without action, there will be no change. So a big part of this webinar is for you to create some action steps that we need to take as part of the plan for getting back to business. So the best of intentions to take action is awesome, and there's a much higher chance of change happening if you have written down some action steps. But in order for it to really happen, you really need the fourth A, which is accountability. So you need to tell somebody about this change that you want to make in your business, and they will need to have a time frame that you're going to say that you're going to get it completed by, and then that person can keep you accountable to make sure that you act. So I have this in my own business. I'm the accountability coach for many businesses that I work with. Some clients I meet monthly with, some I meet quarterly. So quarterly is the minimum term that I recommend that you're checking in with your business coach, because too much is happening in the business environment to only see your business coach or your accountant once a year. And finally, the last step is acknowledgement. And so it's acknowledging the change happened or didn't happen and what got in the way, and resetting the goal when necessary. But what I have found is, even when I haven't done the actions that I've said that I was going to do, when I've acknowledged that to my accountability coach, there's a much greater chance that by the next 3 months I will have done it, because none of us like to set goals and then constantly repeat them. So let's think about particular action steps that you can take on the area of your risk in your business, and keep thinking about that as I talk through the next slide. So the next mindset, which helps keep that change accelerator on, is the results mindset. We know we can't keep doing what we've always done if we want different results. We worked that out previously. So how do we ensure we get the results that we want? First, we have to decide what we're going to do. So we need to be very clear, make some decisions about what area it is and what actions we need to do to improve that area of the business. We only want between 1 and 3 actions. Any more than that, we run the risk of overwhelm and doing nothing. And of course, we've got to do these actions in this particular area of business while keeping all the other business functions working. So already putting in this 1 to 3 actions is more than what we usually do. My absolute favorite thing to do is to spend half a day with business owners going through what their key tasks for the year are, setting the budget and working out the opportunities, threats, and most critical actions for their businesses that year. Second thing is for each of those goals that you've created, those 1 to 3 goals, you then need to break down into mini actions to make sure that you achieve them. So that's the D times the A. These goals in action form the basis of your new plan for the next 3 months. So going back to the initial thoughts, let's put in now some actions for that area between 1 and 3, depending on how hard the actions are that you're putting down. So if you've got a really hard action, just one that you're focusing on for the next 3 months might be enough. I'm going to wait for 15 seconds because I want this webinar to be practical. So think of some action that you can take to improve the area of the business that you want to work on. Okay, then remembering the 4th A of change, have some accountability, or other things will get in the way and that plan won't become a reality. The last thing we want to do is create a business plan or any kind of plan, do that valuable thinking work, and then throw it in a drawer and never look at it. We want you to achieve your goals. So find somebody independent to hold you to account. And I do not mind if you email me at the end of this webinar and let me know what your actions are, and I will hold you to account and what time frame you want it completed by. So once you've got those 3 actions, you've made the decisions, you've created the list of mini actions, and you've found somebody to hold you accountable, then you're going to have the results. And those 3 components are essential to achieving your desired results. The most important thing in your plan is implementation. So next. As we embrace our new plan and we're getting clear on our focus, what are the areas that are within our control and will have the greatest impact on the results? In this area, we should think also about things that we could stop doing to free up time to do new things, because it's what we can say yes to is defined by what we say no to. So to help getting back to business, there are 5 areas that might have the biggest impact for you. Firstly, working on the business, because it's essential you take time out to work on the business, not just in it, and continually improve your business processes. Second, reviewing your product and service mix. Thirdly, considering marketing and communication. Do you have a plan for how you're communicating that you're in business to your clients? Do you want to attract a different sector of the market? Looking at your human resources, do you have resourcing gaps? Do you need to recruit new members? Do you need to create a new organizational chart? Are you over-resourced in any area and need to reduce that resource? And lastly, in this webinar, we're looking at the finance, the profitability, and the cash flow. This is about personally as well as your business budget. What changes do you need to make to your budgets? And what bank support perhaps or government support is available for you to draw on? So let's go into these areas right now. So there's lots of cliches about working on the business, but what does it actually mean? Well, working on your business is when you take time out of your day role and focus on planning and strategizing to make improvements to your business or to your business knowledge. It's so easy to get bogged down in daily tasks, emails, rushing here, rushing there, to forget to concentrate on what you want the future of your business to look like. And so without a plan, you don't have a clear understanding of what you want to achieve. And once you've set that plan, you need to review it and update it regularly. Your best efforts at setting the plan aren't worth anything if you never look at it again. And I said that before. I liken the importance of planning to getting in a car to go on a trip. If you want to do the same trip as you did yesterday, chances are you'll get there. You know the way. However, if you Google the trip in advance, you may discover there's a big traffic jam and the fastest way to get to your destination is along a different route to the way you took it yesterday. If you only ever work in your business and you don't take time out, at least monthly, to work on your business, so if you're working in rather than on, even for a few hours, you're guilty of being self-employed with a job. You don't have a business. Keep this up, and eventually if you'll work too hard and you'll forget the reasons why you went into business in the first place. You can suffer health problems, you can get burnt out financially and physically. The business can be sold when you decide to move on. If everything depends upon you, where you give up your self-employed job, often income just dries up and there's no enduring future value. So you want your business to be independent from you, and that takes work. And just working harder isn't working on the business. One of the important things about working on your business is working on your leadership ability. And leaders are readers. It's really true. I encourage clients to have the best chance of success. They need to train their brain to look at things differently. And I believe reading new business books every year is important. You can listen on Audible if that's easier than reading. Here are just 2 business books I'm recommending. Out of these 2, I would start at the bottom one. It's a bit of an easier read. So creating new habits of behaving like a growing leader, and you'll become that person which you habitually work on becoming. If you want a list of leadership books that I read and do recommend to clients, then email me after this presentation. Sorry about that. Some of the habits that I believe are important for leadership is dedicating time to work on the business regularly. I try and make Friday afternoon the time that I relax and do some reading and some thinking and perhaps some training and some webinars. So I block out the webinars that I get through the week and listen to them at the end of the week on a Friday afternoon. It's important to take time outside of your business for your own well-being, and we're going to talk about that a bit more later. Staying positive and looking at things from the bright side, focusing on the things we can control, like we cannot control the government and the taxes and the rules that they put in, but most things we can control, and certainly our attitude is. And then the final thing that I'm always going to say as your accountant is to start measuring the key statistics in your business and look at your numbers and understand what they mean. This image depicts this image depicts the 10 departments of every business and the link between working on the business, which is the strategic role as the director or owner, and the operational departments. This plan filters the leadership into each of the operational departments. Think broadly about each department, what each department needs how it needs to respond to getting back to business. So as I said before, we're going to focus on the 4 which are most relevant to all of you, but there may be other departments that we don't talk about today that are actually the most important thing, and you can be sure that I'm suggesting that you focus on what's most important to you, not just the 4 that I'm selecting. So firstly, going into product and service mix. The biggest area of opportunity in the current climate is to review your product and service mix. Can you diversify your offering or move online if you haven't already, or focus on different customers? You should have information on hand to evaluate every service that you're offering to see which ones are selling well and which aren't, and the profit and gross profit margin that each is contributing. Have any of your services due to the COVID situation become obsolete, or are there complementary products or services you can add to your mix? I want to introduce you to a useful framework for you to make a plan for adapting your product or service mix. It's called the Ansoff matrix. You may have seen this before, but it's really useful to help you determine your marketing strategy and understand the risks when expanding your offering. This framework shows you 4 strategies for growth based on new and exciting existing markets and products. The first strategy is market penetration. This means selling more of your existing products and services to your existing markets. There's many ways of doing this. For example, communicating more with your customers so they're aware of everything that you're offering, training your team to cross-sell or upsell, starting a loyalty program, encouraging your customers to buy more often. This is the lowest risk and most cost-effective strategy, for your customers already like you and trust you, so it's a good plan to increase their retention and increase penetration by selling more of existing services to your existing clients. Next, it's a matter of choosing to develop a new product to sell to your existing market or sell your existing product to new markets. If you choose product development, think about, do you have some products or services that you can add more value or develop entirely new products or services? A few years ago, here at Tax and Trust, we developed a service called Giving Business Planning and Wealth Planning to clients. We've been successful in selling these services to both existing and to new customers, and now more of these clients wish to update their plans annually. That's an example of product development. I developed my services from just doing accounting, tax returns and GST to including business development. Or the third one, if you choose to market development, you could expand graphically by opening in a new location or targeting new segments. Many clients who are successful in one location wish to expand and grow into another. And this definitely introduces a chance to meet new customers that you wouldn't have without opening into the new locations. Aucklanders don't like to travel far, and many prefer to buy local. So a successful West Auckland business will grow faster by opening another branch, as long as they do have the right staff in place. The final strategy, diversification, involves both new products and new markets. It's more high risk, but still appropriate sometimes. My sister had a very successful tourism business based in the Coromandel. 90% of her income was from foreign tourism. She still is doing occasional tours for New Zealanders and now from other countries like Australians. However, most days she's diversified by operating a native plant nursery and building a huge veggie garden that she sells produce to locally in the farmers market. This is what she used to do before she became her tour guide business. So she's pivoted, she's diversified, and at times like this, it's important to have that skill in your mix of the way you can do any marketing. It's also important not to take on too much. So start with 1 or 2 strategies, perhaps the lowest risk one or the second one, whatever is the most appropriate for you. And this leads us on to discounting. The impact of price on services. Sorry. Often when you're reviewing your product or services, it's a good time to review pricing. Sometimes you're tempted to discount your prices, hoping this will result in greater sales and increase in gross margin. Or you might consider increasing your price as a way to grow your revenue. Before you change your price, it's really good to understand the impact of this. For example, if your gross margin is 30% and you discount your price by 10, you need to have 50% more sales to keep to the same profit level. That's a lot of extra sales. Or if you choose to increase your price by 10%, you still have a gross margin of 30%. Your sales could reduce by 25% before your gross margin will reduce to the level that's lower than it was prior to the price increase. So we send you these tables if you are interested in after the webinar to help you establish your pricing levels. If you're unsure of what your gross margin is, I can help you calculate that too. Pricing is important and discounting is a very scary strategy. Marketing and communication. There's never been a more important time to get clear on your marketing and communication. There's so much noise in the marketplace. One thing's for sure, your loyal customers will be eager to support you as you get back to business. And that lies your opportunity for expanding your customer base. However, you're going to have to communicate this across multiple channels, and in social media, your advocates or those that like working with you can like, tag and share their support. And I'd love you to do that with Tax and Trust. It starts though with crafting your message, which above all else should be clear. So what is the clear message that you want your customers to know about your business? Your clear message should be promoted on your website, across your social channels and Google listings, on your physical premises, and your email signatures, even via text messages, Facebook Live, and so on. Don't assume that all your customers are going to look for you and all the information in the same place. A potential customer might need to see the same information in the messaging a couple of times before they prioritize picking up the phone to contact you and move some business. It's about relaying key information, managing expectations, and inviting feedback. It's a fabulous time to try something new in the marketing place because there's a lot of empathy and appreciation for those businesses that are adapting to their challenging times. Craft a unified message to keep your audience updated and anticipate questions you may get. Encourage your team to script responses so they can convey clear and consistent messaging. Maintain customer trust, restore morale, and return to some kind of normal in your business. All messaging should be timely, relevant, empathetic, and considerate of customer needs and challenges. One of the things we do in a business plan is clarify the key message that you are wanting to deliver across all your marketing channels. And it takes a bit of wordsmith work to clarify your key message. It's sometimes known as an elevator speech, and encouraging my clients to know what their key message is to attract the target clients that they most want to attract, and to be able to say it relatively quickly without any practice as such. So for me and Tax and Trust, our key message is that we want to help grow great businesses, and we want to help the leadership in those businesses to develop better leadership skills so that their businesses are giving them more freedom in terms of time, which is very important in this time poor world, more freedom in terms of financial reward, and more freedom in terms of peace of mind. They're not worrying about their business day after day. So that's my elevator speech. Everybody should have an elevator speech, and then it's how we communicate that and all across all the forums that's important. So part of the services that we do in here at Tax and Trust is we do marketing plans for clients, and so we help our clients get clear on these who their target customers are, and I've gone through a few slides accidentally. Sorry about this. So we clarify messaging and how we're going to stand out for our messaging. The slide's not appearing. I'm not sure what's happened. I'll just stop for a moment and just try and get the slide back. Gosh, it all happens at once, doesn't it? That's it. So consider who your most profitable customers are and how you're going to target them, and what marketing do you, types of marketing do you want to your marketing to speak to, and creating a clear plan to deliver visually engaging content across your channels to promote awareness of what you're offering. Consider ways to stand out from the noise, as I said before, getting creative and considering new promotions. One of the things that we've been learning is we've been working with a digital marketing consultant is to attempt to make our communications more friendly and less standard, if you like. So we have found that that's not an easy process. It means that we have to do some more thinking, but that's part of standing out, is to just make sure it's more relevant. Our content is more relevant by doing that. At Tax and Trust, Rhonda's in charge of our marketing, and she's developed extensive knowledge on producing quality newsletters that are read, and updating websites, and launching our services, including these webinars and seminars that we hold. So if you need help in these areas to grow your business, reach out and we'll see what we can do to help you, or put you in touch with some of the marketing specialists we use. HR is another hugely important consideration. Your plan should include assessing your HR needs. Can you afford to keep all your existing team on board? Do you need to recruit new people with changing your service mix? You do need to clarify your desired structure before looking for new employees. You should shape the new roles based on what the business needs rather than the skills or shape of existing people into the roles. Having the wrong person in a role can be very damaging in the long run, both for them and for your business. I was reviewing a client's profit and loss this week, and we went back 5 years. The revenue growth was very unexciting, and some years it even went backwards. This was in a business that should have been steadily growing. The client and I decided that one of the reasons of the slow growth was due to the failure of having the right employees doing the right tasks and empowering them to do their job without supervision. There had been lots of efforts made by the business owner, but the results were showing that despite massive investment in the training and team coaching, it just wasn't enough. There's been a complete restructure of the business since last year, and we're both hoping to see massive changes this year. So assuming and assessing your HR needs is a really good way of future-proofing your organisation. And it needs constant monitoring. So we do our organisational chart every year here. Jim Collins wrote an excellent book called Good to Great. In this book, he suggested you think about your business as a bus. You're the driver and your team members are the passengers. Who's currently on the bus? Who's definitely along for the ride, and who needs to get off at the next stop? Would you rehire all of your existing employees if you had the chance again? It's worth having difficult conversations and moving people into different positions if you need to get the bus going better. The client I was speaking to about the slide above had a retail side of the business and a service side. In the last 6 weeks, one branch had retail sales of 24,000, The other, which had actually a bigger service division, had retail sales of $4,000. The difference was all about staffing, with one staff member in the first business focusing on increasing customer service, selling more, and increasing her own commission. And the other branch, the salesperson seemed happy with the present salary. The important thing here was that this difference, not that this difference happens, because that's business, but that the business owner is regularly monitoring these numbers and can see and take action before the situation gets worse. So it's really important to have the right people doing the right thing in your business. So are there responsibilities that right now you should be taking back? Have you found that you've had reduced sales and therefore you might have to put back on some of the hats that you've previously taken off? Maybe you do need to take on the role of salesperson. Maybe you can outsource your marketing department instead of having an in-house resource. You may have already reduced the size of your team already and now need to recruit more to keep businesses moving. People are one of the most important resources you can have. To work smarter and not harder, you must develop and empower an awesome team. Either way, every business should review their HR needs, ensure their bus is the right size with the right passengers in the right seats, and support each other to perform best. The healthy mind platter. This is a concept I learned about earlier this year, and I found it extremely helpful to keep in mind to make sure that I'm looking after my own mental health as well as my team. So the Healthy Mind Platter is made up of 7 activities listed here, which we should do daily or at least weekly to support a healthy mind. These are physical time, exercising, moving our bodies, downtime or chilling out. We intentionally let our minds wander. Perhaps for you, it's listening to music, drawing, reading. For me, I can have downtime just doing the dishes, and it's just easy. Playtime, where we do something fun and encourage joy. Sing. If you have children, it might be playing with them, reading them a story. Sleep time's an obvious one, but it's crucial that we are getting sufficient quality sleep. Time in is interesting. This is spending some time every day reflecting. It might be journaling your thoughts, doing some yoga or exercise, meditation, planning, practicing gratitude, prayer. Focus time. This is where you're focusing on your work with discipline. Working's good for us, especially without distractions. We're all doing all the rest and don't have any focus. We won't move forward with our life. And lastly, connecting is essential. Connecting with other people and with nature. So these 7 may be overwhelming, but you can do 2 or 3 at the same time. So, example, playing with your kids outside might reserve a physical and a connection time and a play time. So you can do 2 or 3 at once. So are your team coping with their life right now? And is there something you could be doing to help them or start doing yourself? So talk about it with your team. Share this this healthy mind platter, and you become better equipped to support them when they're in the right frame of mind to be productive. If you want this the details of the slide, let us know and we can give you that at the end. Okay, so we've talked about profit mix, we've talked about marketing, we've talked about well-being. We're also going to talk about finance and how that impacts your profitability and cash flow. So it's important to get the order right. Firstly, you need to start off with your personal circumstances and determine your personal budget for the next 12 months. That's hard work. Very few people do it. But then they end up constantly drawing out of their business, and their drawing's higher than what the business can afford. So you have to find out what you personally can afford and then do your business budget and see if your personal budget's achievable given the business's cash flow and profit forecast. And I really enjoy working with clients who are doing this together with us. The first step in improving cash flow and reducing the stress and strain on your business is to review your personal budget. And we really encourage our clients to work with wages and find a level of a wage that you can afford to live on, the business can afford to give you, and so therefore you're not having big tax bills periodically through the business year. So after you've done your personal budget, we can update your business budget. We can help you with cash flows and forecasts and coaching. So your business budget does need constant review and updating, and when you purchase new things like capital expenditure, we can help you manage your cash flow and make sure you can afford that new truck or that new car or whatever it is that you're looking for. So the next thing we're looking at is the 7 causes of poor cash flow. I'm going to run through this really quickly because we're running out of time to go through it in fully, but this is subject of another seminar that I run, so you can feel free to come back to that seminar at that time. So the first is looking at your accounts receivable process. Can you improve that, who you're giving credit to, and reduce the number of days your debtors take to pay you? Secondly is accounts payable or creditors process. Thirdly is inventory. Fourthly is having the appropriate debt or capital structure. So if you have got overdraft or credit card debt, if you can convert that to a term loan, that's going to drop your interest rate. I'm really, at the moment, I'm engaged with changing my mortgage to get a different mortgage repayment schedule, and that's going to make a massive difference to the cash flow of my business when I do that. Overheads are costs which don't normally change, and there are things like utilities, rent, advertising, and you should be reviewing these costs annually. Are your premises still the right size for your business? Accountancy can be seen as an overhead and a cost, and if that's the case, then you need to cut it. If it's seen as an investment to help you grow your business, then you might want to increase it because that can make a significant difference having the right advice in your business. 6, your gross profit margin, which is what's left after sales from deducting your variable costs. What can you do to increase your margin? And there's a whole lot of strategies around these. Every single one of these 7 have strategies around them. And finally, your sales level might be just too low for your overheads. And small changes in how to create extra value when you're selling may have a massive impact on your conversions and increase your cash flow. So I can talk more on that subject in the next webinar because we're going to be teaching about creating value from selling and how to improve your sales in the next webinar. There's also 7 ways to grow your business. So the last slide was about cash flow. This is about business growth, and they're different areas, although they're obviously overlapping. Again, this is a whole seminar in itself that can take 45 minutes to go through in detail, so I'm running through it at breathless very, very quickly. Firstly, do you need to increase your customer retention rate? Is there something you can do to delight your customers and make them want to return to you? Do you know what your customers are looking for and when they do business with you? Can you increase more leads to attract more prospective customers, reflecting on what we discussed today about marketing and improving our marketing communication? Thirdly, do we need to help in converting those leads into customers? How can we create more value in the eyes of the customer? Fourthly, increasing transaction value or getting your customers to spend with you more with you each time. What additional opportunities are there to sell to your customers? Have you made that an easy process? The 5th way is to increase transaction frequency. In other words, to get your customers to buy from you more often. So one is to spend more and one is just to buy more often. How can you encourage that? And there's strategies that you can do for this. 6th way, reducing the cost of your sales or variable costs. Can you get better supplier terms, increase your efficiency, reduce a team member? Finally, reducing your overheads or fixed costs, which can sometimes be looked at as a sign of poor cash flow. Again, this is too much to consider all at once. And so if profitability and cash flow is the area of business that you want to focus on, then you need to think about just one action or one strategy from all of these that you might want to work on more. So one of the things that we do is help clients with a recovery plan. And, for example, this is a plan that could be happening, and so the opportunities in this business were that there was an opportunity to do online ordering and bookings, for example. The threats were listed there, and then there's some different KPIs and different habits to pick up to think about growing the business. So this is the sort of thing we do in a recovery plan or in a business plan. It's different but similar, where we look at the things that have changed and work out the best strategy to make the most difference and to focus in the next 3 months on. What's really important is to avoid doing nothing. So you're going to be busy, you're all busy running our businesses. So you have to only time to focus on one small change or maybe two, depending on the actions and how big they are. And that's going to give you the greatest results and grow your business. So let's talk about specific areas of support we can offer, some of which are free for you. So after this webinar, we can send to you a risk register, although, as I said to you, I prefer to do that in a complimentary meeting with you to go through your risks and find the one that's the most crucial. We can send to you a personal budget template if that's what you'd like, or an action list of what to do after this. They're all free. Just let us know by the end of the webinar. We can spend time with you, either a day for a full strategic plan or half a day for a business plan. Sometimes I do that over 2 months, 2-hour sessions each. We are going to be running in the near future virtual Planning for Success meetings, which is a virtual coaching time once a month, and you can join a group doing that. We offer one-on-one business coaching where we can focus in on those areas that you most want to work on. We can help with marketing plans or cash flow plans with quarterly coaching. We are also running later this year an organisational chart workshop. So that's a bit of work to create your first organisational chart. We suggest 9 to 10 hours work in coaching, and then there's extra work after hours homework. But it's really worthwhile, and some massive efficiency gains are usually make that time just so well spent, and especially if business owners are struggling to get through everything, it's a particularly good thing to do. So as a result of attending this webinar, you're very welcome to make contact with me, and I give you a complimentary review meeting where we go over your business and find out the area of your business that you most want to work on and help you decide your most pressing business development need, and that's free. So let us know if I can help further as a result. So now it's time for questions. So if you'd like to submit questions via the chat panel, and Rhonda will be asking them.
Okay, so our first question is, when is it a good time to change your pricing?
So I think it's a good thing to review regularly. Like every year we review our prices, and that doesn't mean that we put them up or put them down. Sometimes they're just the same, but I think it's really important to make sure that you are still profitable and your prices are part of that equation of pricing. So I believe small increases regularly are better than large price increases, and sometimes a price decrease is required, and that happens for us if a client, for example, sells part of their business or their situation changes, and we need to make sure that we stay competitive with their reduced size business. So I think pricing is something that you should look at regularly, annually, but then when you're putting in a new product or new service, then you need to spend some time to make sure that you are pricing to the right market. So it's kind of on and always. The discounting thing that I mentioned before is a scary part. I am always blown away whenever I read those numbers about how just a 10% reduction in price means you have to sell 50% more. It's just so much. So we need to be careful.
On that note, the second question is, how do you know if your gross profit margin is too low?
If your gross profit margin is too low, you won't be able to cover your overheads, and you're not making a 10% profit at the end. So that's the ideal business, is you've got a gross profit that covers your overheads and there's a 10% profit at the end. If there's 15% profit at the end, then that's saying to me that it's a really good time for the business to grow and potentially spend more money and creating another job for somebody or more advertising, and go back to the 10% that you have at the end. So yes, that's when you find the gross profits margin is too low.
Okay, and one last question. What would be the best thing for a small business to do to increase leads?
So if you're looking at increasing leads, I think the most important thing to do is to sit down with your advisor and to create a marketing plan and work on, there's a list of ways of getting new leads, and you can trial a different strategy than what you've been trialing, and you can spend more money on perhaps Google, or you can do some leaflet job. There's just so many. I've got a big list of different things you can do to encourage more leads. However, starts with a plan, and it starts with just looking at 1 or 2 simple actions that you can make in addition to running your business and your existing business. Thank you. Well, thank you for those questions, and thank you everybody for staying on the webinar. And we're just going to click through the next slide, and I'd like to share this quote with you. The most successful people see adversity not as a stumbling block, but as a stepping stone to greatness. So adversity makes us better. That's what I really believe. So make a plan today on how you're going to overcome the changes and challenges you're facing. Commit to at least 3 actions that you're going to take as a result of attending this webinar on that area of focus that you set up at the beginning of the webinar. Write it down. Give each of these actions an owner who's going to do it and a date that it's going to finish. Remember, if you need our support, we're here for you, and please contact us for that complimentary meeting.